on-time repayment. It is actually an improvement of 2.6% over the last financial year. At the same period, we were at 95.8. So it has improved over the period of time in this financial year. And overall, I think if you look at NPA also, it's pretty stable. We don't anticipate any increase in NPAs. The portfolio quality will remain very good. In fact, the loans that we have originated post-COVID are performing really well. Our credit costs are going down as compared to the last financial year, where we had around 3% credit cost in FY23. It will come down significantly. It will be almost half of that in terms of credit costs.
All right, Sadaf, thank you so much for joining in. Although you're from a microfinance institution, you've come in at a good time for the market, because as we speak, the Nifty Bank has hit a record high. The Nifty Bank, we were talking about how it was facing some sort of supply at record high levels. Now it's gone past that. 48,650 is where it is. The earlier level was 48,636. Before breaking this, the Nifty Bank had seen some supply at 48,630 within 6 points from a fresh record high, and now it's gone past that level itself, making it just about 2.5% away from the record, or an important milestone of 50,000 on the Nifty Bank. Big move coming in on Axis Bank, and that's the one that has led the Nifty Bank higher. And what makes this one even more special in today's trading session is the absence of contribution coming in from HDFC Bank. So if you pull up the contribution chart of the Nifty Bank today, you'll see not much coming in from the PSU banks. The PSU bank index is actually lower, and not much coming in from HDFC Bank as well. So it's a couple of these corporate-facing banks like ICICI and Axis, which have moved higher and contributed to the Nifty Bank, and these have been underperformers. So let's see whether this sustains and makes it a fresh move for the Nifty Bank itself, coming in from these underperforming banks earlier. But for now, for the record books, today has been a red letter day, because the Nifty, the Sensex, the Nifty Bank and the mid-cap index, all of them have hit record highs.
Yes, absolutely. No complaining. So maybe inching towards that 23,000 mark for the Nifty as well, aided by the strength that we are seeing for the mid-cap index as well as for the Bank Nifty. In terms of gains for the Bank Nifty, Axis Bank, ICICI Bank, Indices, Kotak, all of these stocks are managing to hold up well. The likes of PNB, Bandhan as well as HDFC Bank sulking. But nonetheless, let's talk about a couple of other movers today. We've been talking about how lively a market it is. Exide is in focus. Hyundai Motor and Kia Corp have signed an accord with Exide Energy Solutions. Sonia is here to tell us how this is impacting Exide, where the stock is up in double digits right now.
Well, thanks a lot for that. So this is a big move for Exide, up almost about 14% right now. Just to give you the news, Hyundai and Kia have signed an agreement with Exide Energy Solutions, which is a wholly owned subsidiary of Exide. Now, this agreement is for electric vehicle battery manufacturing in India. So what Hyundai and Kia are planning to do is for improving their localization of manufacturing of products, they are now boosting their battery localization for their electric vehicles in India. Now, they will have a specific focus on lithium iron phosphate cells, and this is aimed at expanding the battery development, production, supply and partnerships in the India market, and hence generating products which are cheaper and more affordable for the India market through localization of ancillaries. Now, this is a big positive surprise for Exide, because this opens up a big market for battery manufacturing of global passenger vehicle companies in the Indian market. Now, earlier the view was that OEMs would do all the cell manufacturing in-house, but now with Hyundai and Kia signing an agreement with Exide Energy, it just opens up the path for more OEMs coming in to the Indian market and tying up with players like Exide. In fact, Elara Capital has a positive view on Exide. They say that this is a big positive surprise and they expect the multiples to get re-rated upwards. But I just want to point out that if you map the chart of Exide in the last 1 year, the stock has already doubled, perhaps in anticipation of a lot of these demand pushes that are coming in from the EV space. So, better to just keep that in mind. But for now, of course, this is a big positive development for Exide. Back to you.
A big positive development indeed, and the stock is up around 15% as we speak. That's about Exide. With that, we'll step into a short break, but a lot happening in the markets. We'll get you all of that and a lot of individual stock-specific action as well. At the bottom of your screen, there is some telecom data that has come in for Feb as well. It's the same story. Reliance Jio continues to add subscribers, remains the market leader. There is some consolidation for Bharti Airtel as well. Adds subscribers, not as much as Reliance, but Vodafone continues to lose as well. With the promoter fund infusion coming in on Vodafone, can it manage to drum up some more subscribers or not? It's something that we will monitor going forward. But a lot of these real estate stocks, they're all in focus today. A roundup of all the action coming in from this space for the fourth quarter updates. Sonal joins in. Sonal.
Well, there's a lot of news other than the fourth quarter updates as well. So let me start with that first up, because Godrej Properties, that stock is higher because the company in a press release indicated that they've been able to sell 1,050 homes worth 3,000 crore rupees in their project Godrej Zenith in Gurugram, and this is in last 3 days itself. It is the most successful ever launch in terms of value and volume for the company. Additionally, they say that they have seen a growth of 473% on a YY basis in their Gurugram market in FY24. And in specific project details, in Q4, they've been able to sell inventory of their new project of around 2,690 crore rupees, which is the Kandvali project in Mumbai. Signature Global is the other one I'm watching out for, because the company has been able to exceed FY24 guidance in terms of collections and pre-sales as per their quarterly update. So their pre-sales in Q4 is up 240%, volumes are up 111%, and collections are up 71% as well. The FY24 pre-sales, they are up 112%, volumes are up 42%, collections up 62%, but there's a mild increase in debt, which is because of higher land acquisition that the company saw in the year gone by. Keystone is the other one I'm watching out for. A decent set in terms of operational update, growth both on a quarter-on-quarter and on a YY basis, barring collections which were down on a YY basis. But pre-sales up 37%, collections up 48%, volumes up 3%. The company has been able to launch 2 projects with gross development value of 735 crore rupees in Q4 and 3,000 crore rupees in FY24. Additionally, the business development has been strong with 4 projects added with a gross development value of around 3,000 crore rupees. Lastly, talking about Indiabulls Real Estate, we've been talking about that big fundraise. They have raised funds via preferential issue to the tune of 3,911 crore rupees. Some marquee names here. Embassy Group has increased their stake after this. Their total fundraise via them has been 1160 crore rupees. Bailey Gifford has been around 209 crore rupees. Blackstone has infused 1235 crore rupees here. Other investors around 1243 crore rupees, which includes the likes of Quant Active Fund, there's Poonawalla Finance, Microlabs, Maybank, Utpal Sheth and Capri Global as well. This is about the fundraise. The company has also announced asset acquisitions to the tune of 1853 crore rupees. This is all in cash, but yes, a lot of developments at Indiabulls Real Estate.
A lot of developments indeed. Sonal, thanks a lot for that. Let's talk about some other updates coming into the consumer space. We have Godrej Consumer, consolidated organic sales growth of mid-single digit and volume growth on an organic basis of high single digit is something that the street likes, and that stock's holding up in the green. Margins for them continue to expand year on year, and this is despite increased media investments. The company had guided for increased ads as a percentage of their overall sales, continuing to back their brands. And the India organic business delivered high single-digit volume growth. Add to that, the Park Avenue and Kamasutra acquisitions would make the underlying volume growth in double digits in a sector which is parched for growth. This is good news. And Goodnight Agarbatti launch was also well received by customers. This, in an otherwise weak category and seasonal category of household insecticides, this is a launch that will take away share from the unorganized space and do well for the company as well. Indonesia, which is the second highest geography for them after India, has reported double-digit volume and sales growth as well. So that's continuing to do well. And the Africa business, while it is expected to post good growth on a constant currency basis, reported number would be double-digit decline, largely because of the sharp depreciation that we saw in the Nigerian currency in the start of this year itself. But the street will focus on reported double-digit volume growth and margin expansion, and that explains why the stock is higher by about 2.5%. The other one, which is surging as we speak and is at the high point of trade, is Nykaa, because a good fourth quarter update coming in for them as well. Gross merchandise value up by a early 30s in terms of a percentage growth year on year. Net sales value and revenue growth for the company will be high 20s, so assuming between 27 to 29% for that particular metric as well. And it's been led higher by both their key verticals, beauty and personal care. That's grown in mid-20s, well ahead of the industry as per the company's release. And fashion as well, which is a growth and margin driver for the company, has seen net sales grow in mid-20s on a year-on-year basis. The other smaller verticals, which is Nykaa Man as well as their eB2B business, which is reported as others in Nykaa's overall business, has seen a net sales growth of over 80%. So putting this, a strong show for Nykaa across all their businesses in the top line. Let's see what the profitability does. But at the current reckoning, the street likes this growth and the stock up 7%.
Okay, all right. So that's on the entire FMCG space. But I'm looking at the hospital space. So Aster DM is one stock which is actually fired up today. Aster DM, the board is going to be meeting on the 12th of April. They are going to be considering that interim dividend for FY24 and declaration of a special dividend. Now remember that this is on account of the segregation and the sale of the Gulf business. April 23rd, Tuesday, will be the record date for the interim dividend as well as the special dividend. So if your name is there on the 23rd of April, then you would be eligible for both these dividends. Now, just to give you a background in terms of the news, the consortium of investors, which was led by PE firm Fadger Capital, acquired 65% in Aster GCC, which is the Gulf business, for $1.01 billion, around 8,400 odd crores. The promoter family retained 35% of the Gulf business along with management and operational control. So what you have now in the listed entity is just the India business. The company has, however, indicated clearly in their presentation a dividend distribution of around 110 to 120 rupees per share to the shareholders of the company. So that's the range which is expected. Now we have clarity on when it's possibly expected. They will retain the remaining transaction proceeds to pursue growth opportunities and to keep it as reserves. So that's the update coming in. That's the reason why the stock is excited, up 6.5%. But let's shift focus to a CNBC-TV18 exclusive. Global Research Bank of America has raised its year-end target for the S&P 500 index to 5,400 from 5,000 earlier. We spoke to Savita Subramaniam, who is the head equity strategy, USA Bank of America, to discuss the recovery going ahead for the S&P 500 and India's performance in comparison to the US. Listen in.
Our view is we're in for a broader recovery, higher highs on the S&P, but not necessarily from just tech, but you know, other companies. So rates, I think, are manageable for most companies in the S&P 500. And, you know, think about it. Tech companies have net cash in many cases. So they're actually making money in this environment. I think 12 to 24 months out, we start to see the productivity gains of companies like Bank of America or other service companies using AI to become more labor light. I think it's fintech, it's legal, it's IT services, and we've already seen this transform certain industries. If you look at the US, the white collar jobs are maybe more at risk, but within the, you know, kind of broader American spectrum, what we're seeing is this reshoring boom. So, you know, we've had since 2018, we've seen companies move property, plant, and equipment out of other regions of the world, mostly China, back to the US. I mean, one of the things that we looked at was, you know, what is the level of real rates that will really destroy the economy? And I don't think that we're there yet. I mean, in fact, in the 80s and 90s, we had higher real rates than where we are today. Yeah. And the market was doing well. Companies were focused on efficiency. So if we move back to that type of environment, I think that it could be still a very strong environment for equities, for the economy, et cetera. I do think that the demographic layout in India is much more attractive than in the US. In the US, one of the reasons that the labor market is so tight is that we have this aging population and you know, these early retirees during COVID. So the demographic story is stronger here. And then I think the consumer trends in India are very exciting.
All right, 15% up move on Exide is what we're seeing, but Ather Energy is not too far behind. In fact, Ather Energy, as we speak, is up 9%. I'll be interested to see, you know, if Amara Raja is showing any sort of move or not, but all these battery companies doing extremely well. Take a short break, come back. We have all things commodities. Manisha Gupta joins with Neerav Bhanshali, who is a member of GJEPC, which is Gems and Jewelry Export Promotion Council. Stay tuned.
Welcome back, and joining us on the show now is Nirav Bansali. He's member at Gem and Jewelry Export Promotion Council. Nirav, hi, thank you so much for joining us. And let's start with gold, because that one is trading at an all-time highs at a time that we are looking at various exhibitions and meetings and shows happening across the country. What is the impact that we've seen of the all-time high gold prices on all of these events?
Gold prices are moving up substantially like this, how it has moved in the past 10 days, has a short-term effect. But it's like very few days till the price stabilizes. Once it's stable at even 72,000, I think the demand is very strong. And right now we are in a very sweet spot.
Nirav, what would you say about the first quarter 2024 trends? Because we do know that Feb wasn't such a great month. March was a complete washout as we've been looking at very high gold prices.
IIJS is the foremost platform for jewelry business in India. It almost provides platform for 150,000 crore plus worth of business for gold, diamonds, and all other commodities, platinum, silver, color stones, everything. Diamond last year was very difficult. We are starting from a very low base, but America ended on a very high note. India demand was always strong last year as well as now. And so hopefully diamonds will outshine gold this year. But the price movement in gold this year, in this last 1 month, 1.5 months, has been startling. So I think it should be good for both gold and diamond. 2024 should be one of the best years that the industry will see, I think.
All right. So gold and diamond both will do better. But what is your sense on the export numbers? Because domestic is slightly on the weaker side. Is exports picking up as well? I mean, as you said, the base is on the lower side. Is that helping the industry?
So like I said, we are starting on a low base. Last year was a bad year for diamonds. Gold did reasonably okay. So this year we will see substantial growth over the last year numbers. And overall demand is picking up everywhere. Mind you that there are a lot of elections happening this year all over the world. But even after that, we are seeing strong sentiments towards jewelry in most of the major markets, barring China.
Nirav, also, what's your sense on the gold price view? I mean, I'm assuming that is a conversation all of you within the industry would be having on an everyday basis.
Yeah, so every day that you cover gold, the gold price moves up. So I think if you keep covering gold, gold is not going to stop going up. But jokes apart, it's been surprising for everybody. This kind of move was never anticipated. But the demand is still strong, and I still expect the gold to go up further. We might end up at 75,000, somewhere around that.
All right.
At the end of the year.
Okay, we are trading at almost 72,000. 75,000 is where you're anticipating it to be. But it's interesting, as you say, that even as the gold prices are at all-time highs, the demand really hasn't gone down. Well, that actually can be seen within the industry. Nirav, there are more store expansions, bigger brand ambassadors, more IPOs coming in this space.
If you look at the next 10 years, India is an amazing growth story. And jewelry sector in India is even a more amazing growth story. There are so many stores opening. I think every year, more than 2,000 new stores are coming up. Industry is getting organized. Organized players are expanding at a very fast pace. A lot of different financing options are there. So private equity, like we saw, Carrot Lane deal, Bluestone deal. A lot of public interest in Kalyan, Senco. And a lot more companies will take this route to grow their businesses. So I think it's a very interesting space for investors as well as for the industry. Next few years, India and jewelry is an amazing growth story.
Nirav, I got stuck after you said that more than 2,000 organized stores is what we are looking for India to be opening up. It's something that we would witness. I mean, that's a huge number given the fact that retail sale is not so strong and the gold price is at all-time highs. But clearly, industry clearly seems to be celebrating and the expectation going forward quite strong. Nirav, thank you so much for joining us. And with that, that's all the time that we have on Halftime Report. Business Lunch will take all the action forward.
Record run continues on Dalal Street. The Sensex and the Nifty gain 0.7% each. The bank Nifty hits a fresh record high today, crosses earlier level of 48,636, hit in December of 2023. Real estate and auto as well as consumer durables are the big gainers, while IT drags.
All right, then let's talk about Wipro and Bandhan Bank, to be precise there. Wipro has appointed in Srini as the CEO, as the managing director, with immediate effect, replacing in theory Delaport. In another sudden announcement, Bandhan Bank founder and CEO Chandrasekhar Ghosh says he will step down in July.
Voltas rides a jump in AC sales and uptick in hiring boosts Info Edge. Strong volume growth powers Godrej Consumer. A likely big special dividend boosts Aster DM Healthcare. An agreement for repairs with the US Navy buoys, Cochin Shipyard and promoters investing in Vodafone Idea buoys Indus Towers today.
Gold scales in to a new high of over $2,350 per ounce, following buying by the People's Bank of China for the 17th month on the run. The yellow metal scales to near 71,000 rupees for 10 grams in India, even as silver soars to almost 81,000 per kg.
Hi there, welcome to Business Lunch. I'm Nisha Podar, and with me today is my co-anchor Nikki Mirchandani. Nikki, welcome to Business Lunch. And the week has started off on a very good note for the markets. In fact, it's a record-smashing day today. Let's take stock of the markets at lunch hour. And looking at Nifty 50, it's been a record-breaking day at the moment, holding on to 0.75 up gains and 22,688 levels. So all-time highs for Nifty 50 is being reconquered again and again, and newer highs are being created. Sensex 2 gaining 588 points at the moment, racing towards a 600-point gain. Bank Nifty, another particular counter and index which has touched its record high levels today, roundabout there, 0.37% up in trade. Mid caps, they are performing well, but they are dwarfed in front of the kind of euphoria as well as momentum that is seen in other big indices. So 0.4% up on mid-cap universe today. So looking at the overall market, advanced decline is a clear picture of how there is a broad-based participation, and therefore advances stocks are higher than the declines, though by a small margin. Well, looking at some of the Nifty 50 counters, Eicher Motors is on fire today, and some of the others from the auto component space, auto space, they are the ones really taking a lead in terms of percentage gainers. Only a handful of draggers for Nifty 50 today, Nikki.
All right, you really can't miss, and let's talk about the comeback that is coming by the small cap index, right? The small cap 100 index, this is the first time in its history that the index has gained more than 1,000 points in a week's time frame. It is also the 9th best weekly performance of Nifty small cap 100 index in the past 20 years. In terms of sectors, auto stocks continue to lead the pack, but however, a fair amount of momentum has been witnessed in the metal space, with companies such as Tata Steel and JSW Steel posting in their quarterly update. Meanwhile, pharma stocks like Cipla and Divi's Lab also continue to perform well.
All right, so that is the synopsis of the market. But let's begin Business Lunch by focusing on the IT major Wipro. Now, the company has announced the resignation of its CEO, Thierry Delaport, and he will be replaced by Wipro veteran and insider of the company, Srini Pillai. Now, Rima Tendulkar, our in-house IT experts, joins in now with all the details on this surprise move and what lies ahead. Rima.
Thanks so much for that. So in a surprise move, Wipro has announced the resignation of CEO Thierry Delaport with effect from 6th of April 2024. He will be replaced by Wipro veteran and insider Srinivas Palya as the new CEO and MD of the company, effective immediately. That said, Thierry will stay on till the 31st of May to ensure a smooth transition, but he will step down before his 5-year term officially ends in July of 2025, which means close to about 14 months forward. Now, the question is, who is Srinivas Pallia? He is a Wipro veteran and an insider. He's been with the company since 1992, and in his tenure, he's held many leadership positions, including that of the president of Wipro's consumer business unit, the global head of business application services, and most recently, he was the CEO of the Americas region, which contributes about 31% of its overall revenue. It's the largest geographic unit for Wipro. So that's Srinivas Pallia for you. Now, what's the street view? Well, the street has taken note of the fact that Wipro this time has opted for an internal candidate versus the previous two being external candidates. Abid Ali Nemuchwala came from TCS. In theory, Teleport was also an external candidate. And as Nomura puts it, being an insider gives him a head start compared to what external candidate would have had. So in that sense, perhaps it is a bit of a positive. But the company has had a fair amount of CEO churn, and the company struggled under many of the CEOs. So the street is going to watch for any change in strategy under the new CEO. It's unlikely we're going to have clarity on it anytime soon, but it's going to be an important watch point, and the recovery is likely to be gradual. That said, any new CEO's job on hand will remain the same. One is revive growth. Now, Wipro's growth rate has faltered that of the peers for a while now. These are the FY23 numbers. Even in FY24, in the first 3 quarters, the company has reported negative revenue growth. And therefore, revival, getting back to industry growth rates is going to be important. And revival of the Capco business, which Thierry had bought in his tenure for nearly $1.5 billion, will also be very crucial. And thirdly, stem the attrition. The company has seen a series of high-profile exits. This list is not comprehensive, but the recent ones, Jatin Dalal, the CFO, the Chief Growth Officer, Stephanie Trotman, these were all high-level exits. Now, all eyes will be on Wipro as it reports its numbers later this month and what the strategy under the new CEO will be. Back to you.
Moving on, shares of Bandhan Bank are under pressure. This afternoon, after Chandrasekhar Ghosh will be stepping down as the bank's managing director and the CEO when his term ends on July 9th. In fact, we spoke to Mr. Ghosh earlier today on his surprise decision, the rationale and more. Listen in to the excerpts from the conversation.
And 2015, I opened the bank, and up to 2018, if you see that the 3 years, and these are the 3 years, I have been developed the bank and keep that people's trust on the bank to deposit, attract to the depositor. 22-23, I recovered more or less in the 70% up, 80%, but not in my satisfaction has come on that achievement. 23-24, I have been seeing that the very fantastic way has been come as a business momentum. Slippage has controlled. 2015, I opened the bank, and up to 2018, if you see that the 3 years, and these are the 3 years, I have been developed the bank and keep that people's trust on the bank to deposit, attract to the depositor. 22-23, I recovered more or less in the 70% up, 80%, but not in my satisfaction has come on that achievement. 23-24, I have been seeing that the very fantastic way has been come as a business momentum. Slippage has controlled.
All right, on that note, we'll slip into a short breather on Business Lunch. But up next, we get you our exclusive conversation with Ather Energy CEO Tarun Mehta on the launch of the family scooter and the EV subsidy. Stay tuned for that.
You're watching Business Lunch on CNBC-TV18. Well, electric scooter maker Ather Energy launched its family scooter called Rizta. The scooter is priced over 1 lakh rupees and will be available in 2 models with different battery capacities. In fact, my colleague Parikshit Luthra, in a candid conversation with the CEO of Ather Energy, Tarun Mehta, asked about the launch and more. Listen into the conversation.
450 was the foundation for everything that we did at Ather, because that's a product on which we perfected the tech, perfected the operations, and got our quality right. But as a product, 450 is a performance scooter. Performance scooters are significantly smaller in addressable market. So for years, we'd been thinking of launching a family scooter, because in India, especially up north and west, our experience says for people, scooter is about family. Like, you buy a scooter because you're thinking of a family use case. So we wanted to build one. We had this in mind long time. When 450 got to a great place with Apex, we kind of figured this is a fantastic time to launch our first family scooter. And yeah, we're very excited about it because it is the larger market. This is the category where, in our opinion, most scooter manufacturers play today. And most sales are. So we're very excited from a product perspective and also from a market size perspective.
Right. So how big is the market size? You must have done a lot of surveys. How much do you expect the scooter to incrementally contribute to your sales?
So it depends on how you define it, but we look at performance scooters and we feel family scooters are somewhere in the range of about 80 to 85% of the scooter market of India. So it's really the vast majority of the scooter market.
Path to profitability for the EV sector, including companies like yours, has that gotten longer with the subsidies getting tapered down? With this interim EV scheme that we're seeing for 4 months, the subsidies have again come down from 22,000 to 10,000 rupees.
Right.
And the idea now is to keep subsidies maximum for 2-3 more years.
The reduction of subsidies has done is it's increased the losses for EV companies in that journey. Because the end state is all the same. Even without subsidies, you make enough money to be profitable. Now, do you get there with, like, let's say 1,000 crores of loss, or 2,000 crores of loss, or 3,000 crores of loss? I think that's a moving scene with every subsequent subsidy cut. And the downward pressure that it creates is every time there's a subsidy cut, you sign up for more losses on your journey. And when you have more losses, to balance it better, you can't get very aggressive with pricing. I think that's what keeps happening.
Does this reduction in subsidy, which has come into effect from the 1st of April, does this put pressure to increase prices? Would you be increasing prices for some of your models?
Yeah, we did. We have to. I think...
You've already done that?
Yeah, we just...